Gold isn't just glittering, it's dominating. In the last 5 years, gold prices have skyrocketed over 105%, smashing record after record. From breaking the $2,000 per ounce barrier in 2020 to hitting new all-time highs in 2024 and 2025, gold has outperformed most major stock indexes. Driven by inflation fears, global uncertainty, and a flight to safety, gold has become the ultimate wealth shield. In this video, we'll reveal the 5 best gold ETFs that are outshining stocks right now. Before we continue, please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Welcome to Investments Mindset, where wealth builders come to get inspired. Let's dive in. When legendary investors speak, the market listens. And in 2025, some of the most respected financial minds are turning their attention to gold. Among them, Ray Dalio, founder of Bridgewater Associates, the world's largest hedge fund, is once again sounding the alarm. Known for his unparalleled insight into global macro trends and his ability to predict economic shifts before they happen, Dalio carries extraordinary weight with his words. According to the report published by the Economic Times on October 6, 2025, Dalio recommends allocating about 15% of a portfolio to gold, emphasizing that traditional debt instruments are losing their value as global debt surges and inflation erodes real returns. He draws striking parallels between today's economic climate and the high inflation chaos of the 1970s, calling gold an excellent diversifier and a critical hedge against uncertainty. Even institutional forecasts echo this bullish sentiment. For instance, Goldman Sachs predicts prices could soar to $4,900 per ounce by 2026, fueled by central bank accumulation and surging investor demand for safety. As volatility rattles the stock market and inflation erodes traditional returns, more investors are turning to gold investing as a proven way to preserve wealth and achieve steady portfolio growth. Whether you're new to precious metals investing or refining your diversified portfolio, understanding the power of gold ETFs could be your next major financial breakthrough. Experts agree that we're in the midst of a potential gold bull market, driven by record high demand, central bank gold purchases, and global uncertainty. According to 2025 gold price forecasts, analysts expect prices to remain strong or surge higher as interest rates drop and the dollar weakens. That's why savvy investors are rotating their capital into gold investments for passive income and long-term stability. A gold exchange-traded fund offers direct exposure to gold without the hassle of storing physical bars. You can buy or sell it like a stock, combining liquidity, safety, and growth potential. Some ETFs hold physical bullion for pure exposure, while others focus on gold mining ETFs, companies that extract and refine gold. There are even junior mining ETFs and explorer ETFs that can deliver explosive returns during a gold supercycle. In 2025, Federal Reserve rate cuts and a weakening US dollar are fueling gold's rally, while central banks are buying gold at record levels, a clear signal of global confidence in this safe haven asset. This trend may mark the beginning of a long-term gold investment supercycle. By learning how to invest in gold ETFs, you're not just hedging against volatility, you're positioning yourself to ride one of the most powerful wealth-building trends of the decade. Stay tuned as we reveal the 5 best gold ETFs outperforming stocks in 2025. We always keep our videos tight and straight to the point without fluff, so please ensure you don't skip any of the valuable information. The first gold ETF on our list is the VanEck Junior Gold Miners ETF, ticker symbol GDXJ. This ETF is a true powerhouse in the world of gold investing and one of the top performing ETFs of 2025. With a staggering year-to-date return of over 105%, this fund has captured the spotlight among investors seeking high-growth opportunities in the gold bull market. To put that in perspective, a $10,000 investment at the start of the year would now be worth more than $20,000, showcasing just how explosive this ETF can be when gold prices surge. What makes GDXJ stand out is its focus on junior mining companies, smaller, fast-moving firms with massive upside potential. Unlike the giants of the mining world, these junior miners benefit more dramatically from rising gold prices because of something called operational leverage. When gold jumps by $100, these companies don't just see a small bump in profits, their earnings can skyrocket as their costs stay relatively stable while revenues soar. That's the secret behind GDXJ's incredible performance. It holds names like Pan American Silver, Alamos Gold, and B2 Gold, each positioned to thrive in the current gold supercycle. With over $7 billion in assets and more than 80 holdings, GDXJ offers broad exposure to this dynamic segment of the gold mining stocks universe. It maintains an expense ratio of 0.51%, which is reasonable for a specialized ETF, and even pays a modest 1.3% dividend yield, giving investors a small stream of passive income while they ride the growth wave. Looking ahead, the long-term projections are equally compelling. If current trends continue, that same $10,000 investment could potentially grow to $31,000 in 10 years, $67,000 in 20 years, and over $130,000 in 30 years. This is a bold but rewarding play for investors who believe in the enduring power of gold. The second powerhouse on our list is the VanEck Gold Miners ETF ticker symbol GDX. This gold ETF is the go-to choice for investors who want solid, steady exposure to the giants of the gold mining world. If GDXJ is the high volatility rocket ship, then GDX is the dependable engine driving long-term gold investing success. This ETF focuses on the most established names in the industry. Global leaders like Newmont Corporation, Barrick Gold, and Agnico Eagle. Companies with deep experience, strong balance sheets, and decades of proven performance across multiple continents. In 2025, GDX has delivered an impressive 99% year-to-date return, proving that stability doesn't mean sacrificing growth. Backed by nearly $20 billion in assets under management, this fund stands among the largest and most trusted gold mining ETFs on the market. Based on projections, a $10,000 investment could potentially grow to around $29,000 in 10 years, $61,000 in 20 years, and over $120,000 in 30 years if gold prices maintain their bullish momentum. With its perfect blend of reliability and growth, GDX remains one of the best gold ETFs for investors who want to invest in gold with confidence and long-term vision. Before we continue, if you find value in this video, even just a little, please subscribe to help us continue to create top-notch educational videos. We appreciate your support. Thank you, my friend. The third ETF on our list brings a global edge to gold investing, the iShares MSCI Global Gold Miners ETF, ticker symbol RING, fondly referred to as RING. While GDXJ captures the explosive growth of junior miners, and GDX anchors your portfolio with established North American giants, RING takes diversification to the next level by spreading your investment across the world's leading gold-producing regions. This fund taps into companies from Canada, Australia, South Africa, and beyond, giving investors a truly global footprint in the gold mining sector. In 2025, RING has surged over 105% year-to-date, matching the momentum of its competitors while offering something unique: international diversification at a lower cost. With an expense ratio of just 0.39%, it's noticeably more affordable than GDX and GDXJ, allowing investors to keep more of their returns over time. The fund currently holds around 40 companies, featuring global heavyweights like Newmont and Barrick Gold, along with key international players that give RING a broader exposure to global mining strength. Its dividend yield of roughly 0.85% provides an added layer of passive income, and with billions in assets under management, Ring offers liquidity, stability, and easy access for all levels of investors. Based on projections, a $10,000 investment could grow to $20,500 in 1 year, $29,000 in 10 years, $61,000 in 20 years, and $122,000 in 30 years, similar to GDX, but with the added advantage of international reach. For those looking to invest in gold with global diversification and lower costs, Ring stands out as one of the best gold ETFs of 2025. The fourth ETF on our list brings precision and performance together, the Sprott Gold Miners ETF ticker symbol SGDM. Unlike broader funds such as GDX or RING, SGDM takes a highly selective, factor-based approach, targeting only gold mining companies with the strongest fundamentals. It focuses on miners that show consistent revenue growth, robust balance sheets, and efficient operations, ensuring that every company in the portfolio has proven financial strength and the ability to thrive in a rising gold environment. This disciplined strategy not only enhances potential returns, but also adds a layer of stability for investors seeking both growth and income. In 2025, SGDM's focused strategy has paid off in a big way. The fund is up more than 105% year to date, standing shoulder to shoulder with the top-performing gold ETFs in the market. While smaller in size compared to GDX or GDXJ, SGDM still manages billions in assets, holding just over 24 high-quality companies, which gives each position greater impact on performance. With an expense ratio of 0.5% and a dividend yield of around 0.6%, SGDM rewards investors with modest passive income while they benefit from price appreciation. Now, consider the long-term outlook. A $10,000 investment in SGDM could grow to about $28,000 in 10 years, approximately $72,000 in 20 years, and close to $137,000 in 30 years. Its selective focus and strong fundamentals make SGDM an outstanding choice for investors seeking a refined, performance-driven edge in gold investments. Now, the fifth and final ETF on our list is the Global X Gold Explorers ETF ticker symbol GOEX, the boldest and most adventurous play in the world of gold investing. If GDX and RING are built for stability and GDXJ delivers leveraged growth, then GOEX is the high volatility, high reward wildcard that captures the excitement of discovery. This ETF invests in exploration stage gold and silver mining companies, the ones still drilling, mapping, and uncovering the next big deposits that could reshape the precious metals investing landscape. These early-stage firms might not yet produce gold, but when they strike a new vein, their stock prices can skyrocket. And that's exactly what we've seen in 2025. So far, this year, GOEX has soared over 106%, powered by surging gold and silver prices and rising investor optimism across the gold bull market. The fund holds around 50 companies, many of them smaller, under-the-radar explorers you won't find in other ETFs. While assets under management are smaller compared to giants like GDX, liquidity remains solid, making it accessible to everyday investors. The expense ratio of 0.65% is higher than its peers, reflecting the specialized nature of its holdings. The dividend yield of 0.4% is modest, as most of these companies reinvest profits into finding new reserves rather than paying them out. Now, imagine the potential. A $10,000 investment in GOEX could grow to $31,000 in 10 years, $96,000 in 20 years, and a staggering $300,000 in 30 years if exploration momentum continues. This ETF isn't for the faint of heart, but for investors chasing exponential upside in the next gold supercycle, It's one of the most electrifying gold ETFs you can own. Remember, in a world where currencies lose value and uncertainty reigns, gold remains the timeless anchor of wealth. And these ETFs offer powerful modern ways to capture that strength. From the stability of GDX and RING to the explosive potential of GOEX, every fund serves a purpose in building lasting financial resilience. The message from legendary investors like Ray Dalio is clear. Protect, diversify, and position yourself where opportunity meets security. Whether you seek steady growth or bold adventure, now is the time to act. Because in every economic storm, gold doesn't just survive, it shines brightest. If you're serious about building real wealth, then consider this channel as your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth the smart way. Please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Click on the next video on your screen. Thank you, my friend.